Right, hello guys, and glad to have you on board again today. We're going to talk about something real important, even though this is something that is part of the trading lesson series right here into YouTube. So this is something that some of you guys might already have heard about, so kind of a reminder, wouldn't be a big deal. But anyhow and anyway, for others who had never have heard about it, because this is an intermediate and quite an advanced level of intermediate perspective in my trading coaching series, which means normally, as you're supposed to follow these videos as you progress, most of you guys shouldn't be aware of what I'm going to be talking about today. That also means that you certainly can't use the trading perspective of what I'm going to be talking about today, because that requires having knowledge of trends, and this is intermediate level, though please don't use the trading perspectives I'm talking about today, but use the psychology behind it, so you don't fall for the narratives and you don't fall for the general mistakes that people will do in those alternate trend structures. So this is what this is all about. What's great now is that this is huge educational content, because these things are happening in real time. They're happening right now. You're feeling the heat and you're feeling the tension. And what I like is that we have in the same time the two alternate structures on two different markets. The first one being the S&P 500 with its beautiful wave one extended in here that is causing a lot of troubles to those facing it. Just like we are experiencing as of right now, and I think we do, still hard to confirm, a wave 5 extended structure going on with Adam. We have all of the preliminary structures, and I stand to see the same psychological mistake that just confirm my personal bias into this market, but I'll explain about it later. So first of all, let's get to the basics of trends, okay? A trend generally is supposed to do just one thing, to move prices from area A up to area B, okay? This is what prices are doing. They're doing some random shit, chaotic stuff, okay? But the underlying structure is always pinned to value areas. Consider area E as a value area, okay? You've got a value area in here, and there's a value area into B, and what prices are doing is that they oscillate randomly, chaotically into area E until they accumulate, which means we start to see some shiftings. Prices don't want to retrace to the lower areas of area A. That generally means a breakout is on the verge to occur, but when this breakout show up, then prices slow down as we get across and around the area B, which is going to be our target, comes the first thing that looks like a pullback, and then a final excess, and then the market has reached its B area target, okay? So we go from one range to another range, and the underlying structure follows a recurring pattern. The accumulation, the divergence, and the pullback final excess structure that builds the area B ranging structure. Okay, of course, in reality, you can have upper shadows, lower shadow is still a lot more chaotic than that, but the underlying structure itself is pretty damn recurring. And that is what occurs in most liquid and normal market conditions with equilibrium in terms of supply and demand. They're just battling each other to assess the underlying value and move prices accordingly. But still, that is the perfect world, which means most of markets do trade that way, but that doesn't mean every market does. There are alternate trend structures due to some technical alterations. The first one is generally led by supply alteration, which means when we get to area E, we'll do it very violently. Meaning we'll get there and there will not be enough supply. A lot of people are willing to buy, okay, and there's no one to sell. So in that perspective, the market violently rebounds out of area A, and it immediately bounces right up into area B. So we go immediately from A to B, and when we're terminating the first wave one extended structure, the entire pullback, the entire breakout has already occurred. There has been no pre-requirements, no pre-signals, there has been no accumulation. We've just gone straight up from V-shaped reverse down to B area target. In that perspective, as we reach out the end game, it comes the first pullback. And what means is that generally there is an underlying overperformance into this market. People see it so bullish because most of the time they've missed the bottom, so they try to catch up on something they've missed. And in that perspective, they take increasing levels of risk in a market that is not supposed to deliver them, which means in the end, disappointment comes up, but the market still holds on to the B area. So those who think S&P 500 will go to the cave end of the world stuff, certainly not. The only thing we're going to get is a pullback because too many people have got in. Now profit takings are starting to be locked on because we're pretty much nearing the B area rather than anything else. But we don't think the value will seriously deteriorate. We're very likely going to stay the fuck out there. What that tells us is that there is limited profits ahead. In that perspective, most people will make general mistake. They will buy the dip too quick, not waiting for pullbacks to retrace more than enough to suitable market buying entry prices. When the market entry prices will be met, people will be boasting for more gains because they've been patient. They've been impatient. So when the market reactivates to the upside, they think that they finally managed to get in, so that this is an appropriate time to surge crazily high because they've missed this. But it's too late. And if you understand it that way, there's no other way around but to understand that there's nothing you can do about it, but to take whatever's left for you, to buy again a second pullback, because of course in here lots of people will buy with irrational market participations, and of course comes a final move in here. So this structure comes with 2 pullbacks and 2 final excesses, which are fake breakouts that generally move up 1-to-1 ratios of the previous ranges. And it occurs 2 times in a row. Okay, and then the structure terminates itself, and that means we find the tipping top of area B. Okay, then comes the other alternate structure, which is wave 5 extended. Wave 1 extended comes with a lack of supply in area A. The thing in here will come from irrational demand in area B. Let me explain. What happens generally in wave 5 extended is this, that we have a huge price action building into area A, very long-term working around the supportive area, then comes a first attempt to break up, okay? But at that point, we're still dealing with area A, okay? And this breakout is failing, which means we retrace right down to the breakout level in here, okay? And build a second range. So at that point, those who got into this breakout have been stopped out and they are pretty pissed off. But this is the exact structure reversed at this one. We're going to get the overlap, which means this support will build right on top of the previous breakout attempt in here. Then comes, okay, so we come from a range. Remember that we come from area A in here. We just make a first breakout attempt in here that fails, okay, and a second breakout that overlaps the previous one. And generally comes the final wave will reach immediately area B, and it generally overshoots a bit, and we violently V-shape reverse to terminate in area B, okay? And we're going to build the same fucking ranges. So when this thing goes as a V-top in here, everyone is excessively bearish because the next move in here is going to be very violent. It's going to feel like it is going from bullish to bearish, but it won't. We're never going to retrace back to area A. We'll always stay into area B and to build a range. So there are lots of misunderstanding of wave 5 extended. Let me explain. And let me take a market in real perspective, Atom, because it's exactly going on with Atom. So as you can see, there is the range we've talked about. This is basically the bottom of area A. We make a first breakout, but we're still in area A at that point. Okay, so we're breaking this trend line, breakout is validated, confirmed, and then boom, it fails. Retrace right down to the breakout level and builds another range, but still higher low points and so on. Okay, at that point comes a second breakout that attempts to break out of area A, okay, which is kind of something like that. Okay, we try to break out of area A, we make half the move, and then, oh boy, we fail again. And we go right back to the previous breakout attempt. We overlap the levels. Okay, so this is the thing. Builds another range, and then comes the third attempt, the one that would definitely get us out of area A, which is something like, we take the average price has been traded, area A is some kind of $10, and in that perspective, $10 is now the area in which we'll never get back to, and we're going to get to look for area B. And we do it in a very strong wave. This is just what we look at for now. Though understand that what's going on in here in terms of psychology is those who took that breakout took a hard hit because they wanted to fast gains and they simply didn't get them. So they feel pretty pissed off. Then it occurs a second time. Oh boy, 2 times? God damn it, this asset is really a piece of shit. Well, it's not. It's just an alternate structure, and the feelings you're going to have about the markets are going to be irrational. And that's exactly what everyone is thinking about Atom now. It's a piece of crap because it's been failing so many times to go up. Now we finally have some strength, and look at that big boy. Ben, it's just failing once again. So what's next is, of course, this is piece of crap. We're going to get back to the previous low points. Well, we're not because we have all of the underlying presentiments letting us to believe that we're going to get the wave 5 extended and that the B area is certainly not yet there, and we're going to get to it. And we're going to do it very dumbly because we're going to V-shape reverse out of the B area and then build a range. So then God knows where the B area is going to be. Could be out of $80 area, 50, eventually 130, eventually 200, who knows? But all I know is that it's going to be dumb when it's going to V-top. Everyone will feel like the market has gone over-rationally bullish and that it's going to crash down. It won't. It will look like it crashes, but it won't. It will just build a range. Okay, so what we're experiencing now is a breakout for Atom. Yes, Atom hasn't even yet started a trend. It's just doing it now. And what's great is that everyone has the previous wounds back in their memories. So they're thinking it's going to go down, and what happens in Wave 5 Extended is exactly what I see now. People participating in this market have irrational bearish sentiment about the asset itself. Every underlying signal suggests a goddamn trend is going on. Look at all those momentum attacks. But still, everyone thinks that as it looks like a weak asset, prices will be bought lower. So everyone now thinks that I should buy Atom at $26, 31 or something. Let me tell you that statistically speaking, it's not going to happen. That doesn't mean it won't, but that means it's very less likely going to be. Because that's exactly what fuels Wave 5 Extended. A lot of people are expecting lower prices because they have a misappropriate perception of the trend strength. They think it's weak, even though right now it's probably going to be one of the strongest assets in the crypto market. And yes, I like that. That means when the market will finally succeed breaking out of these short-term range, everyone will surge because of what? Because everyone will figure out they were wrong and they will try to jump on board, and there will be not enough people willing to sell. Remember what is driving Wave 5 Extended? Demand. Lots of people are going to be willing to go in because when we break up, people will say, oh, yeah, Atom might be a thing, so I really want to go in. So they will jump in with very limited people selling. So prices will rapidly rise as any new buyer will take on the very few sellers in front of them. So this is not a supply, it is not a supply-led market. It's a market that is led by demand that is irrational because everyone is willing to get lower prices, which they won't get. So they will have to buy breakout trades, which will force prices to rapidly rise up again. The underlying trend waves are increasingly bullish. They rise, yet no one sees them that way. Everyone right now sees this market as weak. Let me be very clear, it is not weak, it is getting stronger and stronger, and the next wave will likely be even longer and stronger than the previous one. I definitely think that the next targeted areas for Atom are 64, call it 60 to 75. Okay? For multiple reasons. Like I said, there is an irrational bearish sentiment in this market, which is not bearish at all, but of course, that comes with risk-taking. This is trend-following perspective, which means this is margin trading, this comes with top losses, and so on. So I've been going down this warning early in this video, and I'll do it once again before leaving you guys. If you ever tried to trade this thing because, oh boy, I just told you, oh, Atom is going to go $70, so I could turn myself a billionaire with this thing. Please don't be dumb enough to do it. The message today is not that you should jump on Atom quick and early, because otherwise you're going to lose money. It's not that way. It's really not that. That means one thing. If you intended to buy Atom, don't be dumb enough to wait for lower prices. Just account for these probabilities in your risk management. That means take large stop losses so that if it happens, you won't be stopped out. But still, as it very likely won't happen, at least you will be on board and you won't be among the ones that will buy the resistances, because if this thing ever retraces the resistance, it will immediately break up because no one is selling and everyone will be buying the same breakout as we would. So try to be smart with this market. You buy average prices and you don't try to be too greedy, okay? Because the greedy guys who want better prices are the ones that are going to miss the shots, okay? Final thing, understand that this area is going to be V-shape reversed, which means the next big psychological mismanagement into this structure is that everyone will surf into this thing without never thinking it's going to end. It will end, and it will end in pain, which means you need to have a plan. You're never going to be able to get exactly at the market top into this market. No one will get the market top, just like no one gets the perfect V-bottom lower prices, okay? So understand it that way. If you ever trade atoms, have some goddamn targets. Whether that is 50, I don't give a fuck. Whether that is 80 or 130, you can use my levels, you can use someone else's level, but have one level in sight. And when we ever get to these levels, if you are dumb enough to think that we can go higher, oh boy, you're going to suffer quite some withdrawal effect. So don't be dumb enough. Have some targets. Don't try to reach out the perfect market top. Don't try to take the biggest possible gains. Just understand that if you ride that trend, you're going to make some money, and try to forecast where area B is going to be. Of course, if you target the next level, you're going to be more and more greedy, and you might be among the ones that will be heavily surprised by the V-top reverse. Of course, normally we're going to retrace, but this will be a very impactful reversal pattern, okay? So the best way to navigate is to take out your leverage position early. Don't try to put them at the highest possible price. Just take them off bite by bite as we grind our way up. This is the way. This is how to efficiently trade wave 5 extended. So learn about these things. If you are invested in atoms, or if you are trading the S&P 500, don't make the dumb mistakes I just talked about. But please, if you don't know how to use my patterns, don't trade this. And that being said, more than enough for today. Bye guys.